All right, today we're jumping into one of the biggest, boldest corporate makeovers in recent memory. We're talking about the industrial giant Honeywell and what they're calling the Great Realignment. This is a massive, high-stakes plan to completely rewrite their own story. So let's get right into it.
So here's the big question, the one that really gets to the heart of it. Honeywell is literally taking apart its own empire. Now, for an investor, this is not just some small adjustment. It's a fundamental change that could either unlock a ton of value or, well, introduce some huge risks. So should you be paying attention? Oh, you better believe it. And we're about to break down exactly why.
Okay, but before we dive in, there's this one key idea you have to get, because it's the engine driving this whole thing. It's called the conglomerate discount. Think of it this way. You've got a shopping cart full of amazing top-shelf items, but for whatever reason, the market will only pay you, say, $80 for the whole cart that's worth $100. But if you sell each item one by one, you get their full value. That discount, that gap, that's the problem Honeywell's management is dead set on fixing.
All right, so to really get what they're trying to do, you gotta see the problem they were starting with. Let's take a look at the puzzle that was Honeywell, this single, sprawling company.
Now, this tells a really interesting story. I mean, just look at the numbers. On one side, you have Aerospace Technologies. That's the crown jewel, no question. We're talking almost 10% organic growth and these huge 26% profit margins. It's the powerhouse of the company. But then you look over at industrial automation. Growth is basically zero, and that split right there is the whole issue. You have this incredible high-flying business that feels like it's being held back by its slower-moving siblings.
So you see that picture, right? The leadership team, under new CEO Vimal Kapur, looked at that puzzle and didn't just decide to tweak things. No, they decided to break it all apart with an incredibly aggressive plan. Let's walk through the moves of this great realignment.
And look, they are not messing around. The speed here is just, wow. This is not some slow 5-year roadmap. It's a total whirlwind. Ever since Kapur took the helm in mid-2023, it has been nonstop, decisive action, announcing the spin-off of their best division, Aerospace, selling off the PPE business, and spinning off their materials unit way ahead of schedule. I mean, this is a team that's operating with an incredible sense of urgency.
But hold on, don't think for a second this is just about selling stuff off. At the exact same time they're spinning off and selling, they are on a massive shopping spree. We're talking a staggering $14 billion in acquisitions announced since late 2023. They're strategically buying companies to bulk up the businesses they plan to keep, like adding CAS Systems to make their defense aerospace group even stronger. This is a total reshaping, not just a diet.
Okay, so with all this chaos, all this buying and selling, where's the payoff for investors? How does all this frantic activity actually make the stock worth more? This is the section every single shareholder is watching. It all comes down to a simple question. What are these separate pieces worth on their own? Let's get into the numbers.
And this slide, right here, is the whole ballgame. It perfectly illustrates the big idea. On the left, you've got Honeywell, the conglomerate, trading at what's called an EV to EBITDA multiple of around 18. That's what the market's willing to pay for each dollar of its earnings. Now look to the right. A pure-play competitor, GE Aerospace, trades at a huge premium, almost 30 times. The market is screaming that it values a focused, high-growth aerospace business more, and Honeywell's management is betting they can close that gap.
So let's play this out. Let's do some back-of-the-napkin math on that theory. This is what we call a sum-of-the-parts model. You take the future Aerospace Co., and instead of that old 18 times multiple, you give it something closer to its peers, maybe 22 times. You do the same thing for the new Automation Co. You add it all up, take out the debt, and bam! You land on a potential value for the company that's way higher than it is today, suggesting a stock price around $302. This right here, this potential unlock, is the core of the bull case.
Okay, that all sounds amazing, right? A clear path to a higher stock price, but hold on. A plan this big, this ambitious, it comes with some absolutely massive risks. So before we get too carried away with the upside, we have to do a serious reality check on the headwinds that Honeywell is sailing right into.
First up, and this is the big one, execution risk. Trying to pull apart a company this massive, while at the same time trying to stitch in billions of dollars in new acquisitions. It's like performing open-heart surgery on a marathon runner while they're still in the race. It is incredibly complex. Then you throw in the risk of a global recession, which would smack their key markets, ongoing pressure on profits from inflation, and all the geopolitical uncertainty in the world, and you've got a very real list of things that could go wrong.
All right, so let's tie this all together. When you're looking at this as an investor, what's the big picture?
It really boils down to a classic Wall Street debate. A super compelling story about unlocking value versus some very, very real-world risks. Let's frame the final bull versus bear argument.
So, on the one hand, you've got the bull case. It's clean, it's powerful. Management unlocks a mountain of hidden value by spinning off that premium aerospace business. What's left behind is a more focused, streamlined automation company. And it's all being run by a team that has shown they do what they say they're going to do. But on the other hand, the bear case is just as simple. The sheer complexity of this whole operation is a huge risk. And all it takes is persistent inflation or a sudden recession to throw a major wrench in the entire plan. So if you're keeping an eye on Honeywell, here's your homework. This is your checklist for the coming months. How's that aerospace separation coming along? What do they decide to do with those warehouse automation businesses? And this is a big one. Are their profit margins holding up? The answers to these questions will tell you which side, the bulls or the bears, is winning the argument.
So in the end, it all comes down to this. Honeywell's leadership has drawn up one of the most ambitious corporate game plans we have seen in a long, long time. The strategy is incredibly bold, and you know what? The math on paper looks really compelling. But the final, multi-billion-dollar question is still hanging in the air. With this incredibly ambitious plan now laid out for all to see, can the execution possibly match the ambition? That's what every investor is waiting to find out.